We'll do it. We do our best.
Yep.
Hello, hello. We are live on LinkedIn, Facebook, and YouTube. Um, hello, everybody. We are today slightly displaced, should we say? We're on the go. Technically, our offices are closed, but we're obviously always working in the background. We are always here to provide education and help our audience. So, for those of you returning to Coffee Time with Marie and Pedro, thank you so much for welcome back. And for those of you who are new watching us, please go ahead and put a thumbs up or a hands up. Just let us know that you are here new. We really appreciate you. I want to encourage you also to subscribe to the channel of your choice, whether if it's Facebook, LinkedIn, or YouTube, wherever you're watching us, to make sure that you know whenever we are getting ready to go live. Just a quick intro. My name is Marie Torossian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor, and a CFO. I'm currently as a CPA advisor and transformation coach. I use my proprietary valuation MT methodology to help business owners grow from their first million to their next 10 million and more. I'm also an author, and I've written a couple of books, and I will definitely make sure to put the links up in the bottom. Um, and um, and as always, I am joined by my tax colleague, Pedro Gonzalez, CPA. Good morning, Pedro.
Good morning. Good morning. And again, yeah, we're all a little displaced from our kind of last minute settings to make this happen. But I'm glad that we did and that we're doing this as our last presentation for 2021. Let's get ready for
Yes.
2022. Again, Pedro Gonzalez, CPA, business and tax strategist, and we help our clients as focus on improving their cash flow, lower their taxes, and develop exit strategies. The three
Mm-hmm.
cornerstones to be able to develop a successful business, and we help our clients in that fashion, developing tax-wise entrepreneurs so they can achieve their financial goals.
Yes, absolutely. So in the past few weeks, we actually launched the first week of October. So we've already had 12 episodes, and we've talked about anything from
Yeah.
self-employment, tax filing days, tax forms. We've talked about tax planning and what it takes, and that was like a series
Correct.
of almost like 4 or 5 weeks of continuous conversation. And then we've talked about cryptocurrency. And recently, last week, we actually talked about buy sell agreements and partnership
Yeah.
agreements, so which were very, very important. And we brought up a lot of important information as to if something happens to a partner, what happens, who takes over and all that stuff, and super important information. And I know one of our followers actually was writing down saying, hey, this was one of my favorite discussions so far. And it's great because we that helps us realize that, hey, you know what, the information we're giving you, it really is helpful to you. And please let us know whenever you have questions. Send us a direct message or an email, through any of the channels that you're watching, and then we make sure to cover that as part of our next educational session when we go live. So today, having Pedro as a business and tax strategist, and he's focusing so much on exit strategy, I figured, hey, why don't we talk about exit strategy? Pedro, this is what you do mainly, and I think it's a great way to start a conversation about this. Talk about maybe a general definition and
Yeah.
or how you define it, and we can take it from there.
Very good. So before we start, I wanted to give you two pieces of information that most people don't realize. One, 75% of businesses never sell. And that's something
Wow.
to start pondering. A lot of those, especially those small businesses, and again, the focusing of our, my focus is mainly the mid and small businesses. The
Hmm.
larger corporations will have a way to, when you see the news, the mergers and acquisitions, they have a market ready to absorb let's say, for example, a publicly traded company. But the majority of the businesses do not sell. And that's something that we need to, and why I also taken a passion on that is to help entrepreneurs to not to let go that asset that they have developed over the years,
Right.
and just
Right.
simply let it dissipate. You know what I mean? Because what happened to most of the businesses is that, um, the basically it kind of dies with the owner. And that
Yes.
is sad
Yes.
because also the other piece of information is that 90% of business owners' net worth is tied up to businesses, and that including real estate. It's not just business; it's in essence intangibles. You know what I mean? It's not liquid, so a lot of their net worth in their retirement depends on the success of those businesses. So when you cannot stop working to be able then to perform or to be able to have the resources that you're going to need for retirement, then it's something that again the reason of the passion behind on the exit strategies to help those business owners to enjoy the in essence the labor that they have
Fruits of
put
their
in.
labor.
Exactly, and then to be able to enjoy it in the latter part of their life. So the exit strategies is to help to start planning towards that again exit that all of us are gonna encounter. It's gonna either be you're gonna either retire on your own terms.
Right.
It's gonna be that you get to a point that you're dissatisfied with the business, you want to sell it.
Right.
You could also get to a point that somebody makes an offer, somebody wants to absorb your business, or you might want to sell it internally, or you want to transfer it to your children.
Sure.
So there's multiple ways to in essence to exit, but again, it depends on the when and the how. How you're gonna
Absolutely.
be able to do this. And so we got to start is the process does not start at the moment you place your business for sale. It has to start at least 5 years prior. And this is again why is it that the 75% of the businesses do not sell? It's because of the lack of preparation. Because when
Right.
you see the need, now you're gonna say, okay, Marie, I'm ready to sell my business, and I come to you, and it's okay. So let's start the preparation. No, but I need to sell it now. I mean, I need the money now. Well, what
Right.
happens at that point is the same happens when you do, in essence, it's a fire sale. I mean, like, for example, in real estate, when you put your property on sale, you have to do some cleaning, some preparation, some
Of
painting,
course. Yes.
landscaping. You do those touch-ups
Absolutely.
that will increase the value, and then you can ask the true market value. You hire an appraiser. The appraiser will say, well,
Right.
Marie, this property is worth X. So now you have, okay, after I done all in essence the preparation, the makeup, I mean, I cleaned up the property. Now I've gone through the leases, I make sure that all my contracts are in place. So the same happens with business. You have to go through the same process. You have to go through your business and do a cleanup,
Yes. Makes
streamlining
sense.
processes, getting rid of any kind of in the process, anything that can potentially create a hurdle in the streamlining it, making it as especially modernizing it. That's another thing that you're gonna see a lot is modernizing your businesses so then they are up to date, because the
Absolutely.
least amount of investment I have to do. The same happens in real estate. I know you're familiar with real estate. I use that a lot of example real estate because I'm
No, that's a
also
great
involved.
example. Yeah.
Exactly. So you have to, the least amount of uh, improvements I have to make immediate as I walk in through the door. You know what I mean? If I'm
Right.
gonna buy this property, this building, and immediately I have to replace the roof, well, all of that is gonna come down on the value. I'm gonna negotiate that. I'm gonna say, listen, I have to come in, I have to do this, I have to do this. I'm gonna give them a list of different areas that I found that I have to
Absolutely.
address as I walk in. The same happens with a business. So if you start now, let's say in a 5-year process, you start with this cleanup, you hire a top-notch, in essence, CFO, and that should be one of your investments, is to hire somebody that is not a bookkeeper. And again, I'm not trying to downplay the role of the bookkeeper, but you need something a little higher level, because
Yes.
now you're moving to another stage of your life, and that is, it's not just the bookkeeping that I need for my own or to fulfill the requirement with a bank. Is that I need to prepare this business for sale or to transfer
Right.
it to my son or my daughter. I want to do an ESOP. which is another method you can create, is an employee stock purchase plan, where then
Right.
your employees will buy out, in essence, buy you out.
Right.
So,
Understood. Yeah.
but all of that takes preparation.
Of
So
course.
you need a top-notch, in essence, a CFO. Either be you hire him full-time or part-time, depending on
Sure.
the needs and all of that. But that should be one of your investments. We talked about last week about the buy-sell agreement. If you have multiple
Right.
owners, having your buy-sell agreements in place. The other thing I wanted to throw in today is the Keyman life
Oh,
insurance.
yes. Very important.
It's
Absolutely.
another, because see, remember the what creates the value. We touched this probably in a couple prior episodes. What's going to create the value for your business is a turnkey operation. So you have to prepare this business in essence to run by itself. So you should hire somebody that is going to, in essence, run the business, not you. You know what I mean? You have to visualize this is in essence ready. It's ready for somebody just in essence give them the turnkey, and here's the key, and the business runs. So that means that potentially you have to get somebody, a manager. Well, what happens if I'm gonna come in and buy that business, and you're telling me now Marie is the key person here, she has this place running smoothly,
Right.
but what happens, something happens to Marie?
Mm-hmm.
How do I, because again, I'm not here to come and replace Marie. I'm an investor. I'm here to buy the business.
Right.
So how do I ensure that if something, last time we talked about buy-sell agreement, that is between multiple owners. If I'm coming in to replace another owner, then I want to see a buy-sell agreement to protect my interest as an owner.
Right.
Now, the Keyman life is to protect in essence, the key personnel that are in essence making the business happen.
Absolutely. Absolutely. They're running the operations. They're making the major decisions. Absolutely. Correct. Yes.
So what would it take if something in this scenario that I'm using, Marie, is what happens? What is, in essence, what would it take if something happens to Marie? Either she leaves, something happens. How much would it cost us to replace her? Mm-hmm. To go hire a top-notch headhunter to go and find us another Marie that he or she can come into this place immediately. Right. And continue the operation running smoothly.
Yes.
So this is another area that, again, gets overlooked. And I'm hoping that people take note on this. We talked about buy-sell agreement. The other one will be the Keyman life. And the investment is really is worth it when you're looking, especially when you're looking at the exit. Because what you're looking is an investment for 5 years. I mean, what you have to do is put all the pieces in place. So then when the buyer comes in, you already addressed this. It does not become now for me to have to now worry about Marie. It's already done. She has her compensation package in order. She's one, well compensated. Number two, she is well protected. If something happens, I know those things are in place.
Correct.
And like we mentioned, the buy-sell agreement. Having those pieces in order. But I wanted to mention the Keyman as also part of the exit, because again, the focus. And what is going to increase the valuation of your business is going to be the having, again, the turnkey operation.
Yes.
We talked about the 90% of business owners and their retirement tied up into the business, and we're going to focus on businesses. You can also, business could be real estate, a portfolio you might have.
Of course.
It could be a bunch of rental properties, and that's how you're being generating income. So businesses, that when I'm mentioning the word business, that's what I mean. It could be a retail shop, it could be an online store, it could be something that is generating income for you. So when 90% of your, in essence, your livelihood depends on that business, then it behooves you to protect that asset.
Of course.
It is and it has value. The problem is a lot of people create these businesses almost like a hobby. You know what I mean? They don't look at it as a this could actually be something that I could, let's say, for example, I got it to a certain point and I no longer want to do it. Well, I might be able to package it and sell it to somebody else. I can take it from there and move it to the next level.
Absolutely.
But most people don't think about it that way. You know what I mean? So they don't create, they don't invest into the mechanisms necessary for the business to continue. So what happens is that you see that the 90% the reason is that they don't have an exit. You know what I mean? Like one of the typical transactions that you see, or transitions that you would like to see, and if you ask business owners, is I would like my son to take over the business or my daughter to take over the business. And let's assume that the son or the daughter wants to do it, but they don't have the money to buy you out. So how are you going to do that? How are you going to accomplish that transaction if you have to leave right now? In the ideal situation, and let's assume again that the son or the daughter wants to take over, they don't have the money to buy you out. So then how you, that in essence created this business, how you going to make it through your retirement when, again, the statistics says that 90% of the people, business owners, entrepreneurs, depend on the business for their retirement.
Right.
So how are you going to do that? So there's mechanisms, and due to the limitations of the stream that we had today, but I would encourage you to take a look at it. I mean, you have to be asking yourself that kind of question. How I'm going to make that happen. If you want to sell it internally, the same issue happens.
Same thing.
And how my employees are going to buy me out.
Right.
So you got to be preparing that, what mechanism can I use to fund this transaction? So my employees, let's say, that's why I recommend at least 5 years. So then you create those mechanisms and funding. So then in 5 years, when I'm ready to retire, it's already in place. The house is clean. I have gotten rid of all the dust and all the, the skeletons. I got rid of.
Yes.
But you know what I mean. You know what I mean. Have the process in order, so then I can go ahead and make that transfer.
Yeah. No, that's a very, very, very good idea, because you're right. A lot of people are out there creating their this legacy, a really big company. But I mean, what I hear a lot more often is that when a business owner wants to leave their business to to one of their children, but the children are not interested. I mean, take for example, I had my dentist, actually, not to I've been going to him for many years. My husband used to go see him when he was a kid. So the gentleman, he got into his 70s. He was still literally doing all of the work himself, and he had a few people. And at some point he said, I got to find someone to kind of onboard, and because none of his kids were into dentistry, nobody was going to take over the business or run the business, even if they were into dentists, but he had to find the right person to bring on board, make a partner, and then let that person slowly take over. And like you said, he did it the right way, because he did it over 5 to 6 years, while the new person started taking over, making more decisions, and then the owner started taking a step back. And that's the right way. And the transition was actually excellent for us, the patients. We didn't really feel anything different, and all we saw were all the newer things that were coming in with the younger partner, major improvements, new machinery, everything becoming more, in-house, more, top-notch work that was happening. It was great, and we still, see the owner here and there. He'll just come by and say hello. But really, that was a great way of transitioning. But, the situation is always that most, children don't want to take over their parents' business. It's not something they want to do.
Correct. No, you're right, and that's again another the psychological part of the transition that has to be. That's why again the preparation for this, because there's also a psychological aspect of this of in essence detaching yourself from the business.
Right.
You have created in essence this baby that now has grown. Yeah. And you have to now detach yourself, and sometimes owners that have a difficult time of delegating and the transition. They struggle many times to see themselves letting go of the business and trusting the key personnel that they have hired themselves to trust them to run this business. And so it takes time, but that's why again at least the 5-year process to kind of allow that happening. So by the end of this process of transitioning, you're ready to move to your next stage, allowing the business to continue, and surviving, because again, you see that many businesses do not make it to a second generation. It's very rare.
Yes.
I mean, it's a very low
Yes.
percentage, and forget about second and third generation businesses. I mean, those are very unique, very rare to see. But at least to see, let's say that either allowing your business to survive and to keep it together, so then you can either sell it, let it merge with another company. At
Right.
least that way you preserve the value. Like you said, yes, it's most likely your children will not want to take over your business. So
Mhm.
preparing yourself for that, creating a market value for your business, because your children will
Yes.
not take over. But then I have to then focus on improving the value of this business, so that I can either be absorbed through a merger,
Right.
or be bought out by either a competitor that wants to buy me out,
Absolutely.
or to
Absolutely.
be sold internally, because now our employees wants to continue the like you said, the legacy, and they want to preserve the culture that they have, because they also know, employees know, that whenever there's a merger acquisitions, there is a disruption of culture, and they might want to say, no, listen, let us take over the what we have created together,
Hmm.
and let's. But then they need a way, a tool to allow them to happen, which it does exist. It just has to be implemented on time.
Yes. Yes, for sure. And then, for me, one of the things that I notice is that most small business owners, they don't even have that secondary key person that they can train and
Hmm.
prep. And that is major, because when an emergency happens and you're rushing to sell, like you said, now that you can't find someone to run that business out of
True.
nowhere. And if you're going to sell, then they're not going to give you full value, because it's not turnkey and operational. They have to rely on you. And if you're in a rush to, because let's say the business owner is God forbid, they're sick, and then they have other things that they need to take care of, so they're selling and they cannot be in the business helping the new owner take over operations, then you're going to have to sell your
Hmm.
business for a lot cheaper
Correct.
than really the true value that you have built.
Hmm.
So I really encourage business owners to really find that person that they can train and build out through with them, so that it's not all in their head, in their mind. They know what they're doing, but then nobody else knows. As soon as something happens to them, they just get confused. Even as small as if it's a 2-3 people operation, it's still important to have that second person, the second in command, that can take over, even if it's for a few days, for a few weeks, if something were to happen to the business owner.
Correct. No, that's our again. As we're concluding this calendar year and preparing for 2022. I think it should be something to every entrepreneur to take a look at. Where are they at in their development
Hmm.
and their exit? I mean, like
Right.
I have mentioned, all of us are going to exit. So
We
you have to,
are,
you cannot
voluntarily or
ignore it.
involuntarily.
Exactly. I mean, God willing, it will be voluntary when you're ready,
Hmm.
but sometimes it's not. And so,
Right.
a couple of the topics that we have discussed the last couple of weeks touch us on that. The importance of your own, let's say, life insurance, disability, the
Yes.
buy-sell agreement, the key man, exit strategy, the accounting systems,
Hmm.
having a good financial information system. All of that is to help you.
Yes.
So then because we know that you're going to exit, so
Hmm.
preparing all of that. And the fact that you might be now, let's say in your 40s, you might be thinking, why should I worry about it?
Yes.
Actually, you should worry about it. You should be planning anyways. I know a lot of these services are marketed to those in 50 plus, but I would suggest that if you're still a young entrepreneur in your 40s, you have a business or businesses, and you ought to be thinking about it. And it will allow you, maybe not necessarily that I'm ready to retire, but
Right.
creating the
Of course.
mechanism so then your business becomes more agile in this world that we're living today. So then
Yes.
you can go ahead and compete. You can prepare to expand. So exit strategy can also be used to allow you can apply a lot of the same principles in your business, even if it's just to allow you to either be more competitive and be able then to expand, for example. And maybe you're not ready to retire, but I'm ready as to expand my business through the acquisition of other businesses, for example. so understanding the exit strategy tools and techniques, then it prepares you to better analyze other businesses and you to absorb other businesses into your platform.
Yeah, no, that's excellent advice. And I know we have talked a little bit more than just accounting and tax, but this is an ongoing issue, and it's all about mindset as well. When we're starting our businesses, usually we're not thinking that far out, but I think once you're in like a two years, 3 years in, I think it's important to start thinking strategically and also like possible exit, because especially when an entrepreneur is starting to grow fast and they start hiring people, but they don't have their systems in place, they don't have their strategic plan in place. They're not really sure where they're going, but they are going. But that only goes so far, right?
Yep.
Like at some point, you have to stop and say, where am I going? What is the plan? What is my purpose of having this business? It's not just having a business. And yes, I have my income. That's great. You have your income, you're hiring a few people, they have income, but then what? So it's always important to keep in mind, what is the purpose of that business, and what is happening 10 years down the road to that business. Just like we think about what's happening to me 5 years down the road, 10 years down the road, where do
Correct.
I stand? What's my purpose? And it could be that, my purpose in the next 5 years to do X, while, after that, I'm expecting to do Y. So it's the same way, I think, for a business as well, to be thought of as a,
Yeah.
something that is a process. It's going to grow, it's going to go somewhere, and then what? It's not going to, it's going to stop somewhere, but it's either going to be merging, it's going to be changing, it's going to, something has to happen. So I think if they start thinking more strategically and long term, they'll be able to make those decisions, and all these advice that we're putting together for our audience.
Yep. No, you're right. That's again the whole idea behind this, and educating, uh, making the entrepreneurs to be more well versed. I mentioned before, and you have said it before too. I mean, you don't need an MBA. At least
Hmm.
have an understanding, basic understanding about different aspects of finance, marketing, accounting. Having at least, and this is the whole purpose of this. I mean, you have us to deal with the higher level, but having
Right.
an understanding, knowing that when you look at your financials, I mean, something has to click and say, this doesn't make sense.
Yeah.
Something doesn't, you know what I mean? I don't know how, I don't know what exactly. And that's why you call Marie, say, Marie, something doesn't look right here. Can you help me out? See, that to me tells me this individual has at least analyzed the information.
Right.
He or
Right.
she's coming to me now after he or she has spent a little bit of time to look at that, and now she's coming in to me is with for the higher level analysis.
Yes.
And so to me, that's what I would like to see more and more of the entrepreneurs, and I hope people watching and listening to us is to encourage them to invest a little bit of more time in themselves, in their own
Yes.
businesses, and that to me will be a great accomplishment.
Yeah, no, I totally, totally agree with you. I think it's important for entrepreneurs to broaden their mindset and their
Right.
learning, into the different areas, because they need to be able to say, well, something seems to be off, So if they don't have that plan in place and that education to help them out, and this is not, and I want to really make a difference. So the stuff we talk about here are based on experiences. This is not textbook. This is not someone just decided to write some, concepts. This is about what we've seen on the,
Yeah.
on the street per se,
Correct.
experience wise. This is what we're seeing, and this is what we want to tell our audience, so that we can help them make the right decisions and prep them to take the right steps. So you should be able to know, as an executive of your own business, as an owner, you should be able to know if something is off, something is not running right, if your marketing dollars are not returning what you're expecting, if your financial statements, month over month, are looking kind of funny and they're not going the upward trend or downward trend. What is happening? If you can't see that, then you need help. That's when you need to ask, for help. And the education we're providing here, it's going to give you that little bit of a high level idea. And then when you need that extra set of hands to go into the details and look a little bit more and help you out, then that's what we're
Yeah.
here. And you can always call on
Yeah.
us.
Yep. Exactly. No, that's like you said, these are war stories. You know what I mean? That we have seen. Like you said, there's no textbook, it's not, it's in essence unscripted. This is not
Yeah,
in that's what we're sharing. I mean, the things that I have seen it many
absolutely.
times. I mean, horror stories of anything from tax returns that were prepared incorrectly to
Hmm.
financial statements that then goes to a bank, and the banker now rejects a loan, and then the bankers is kind enough to tell the individual, listen, this financials don't make sense.
Right.
uh, business plans that get unfunded
Hmm.
many times because they were poorly prepared. You name it. Businesses that don't sell, or they offer. When the offers placed on the table, they feel offended. But listen, this what you have does not sustain the value that you have in your head.
Yeah,
Sometimes they have a number on their head. My
correct.
business worth $1 million, but when you see an offer put on the table $200,000, they're offended.
Yes.
You know what I mean? And I understand why, but the reality is that your business as it stands is not sustaining the $1 million you have in your head. And so, on and on, businesses that you see that get audited, and their records are in such a bad order that, there's
Yes.
no other way. You know what I mean?
Yes.
You cannot prove the deduction. How do we go back and then prove that this agent, that his or her job is to, yeah, to poke a little holes in there to see if you can, if you make it. So things like that. You know what I mean? Businesses that you see that there's disputes, and now comes the moment of determining how do we settle this, because our agreement does not say anything about the
Yes.
the the division.
Yes.
So it's not until those things happen that you go back and say, "Crap." I mean, I wish I'm telling you, and the word that I said is nothing when when they get to that
When what
moment.
they're saying, really.
Ooh,
When
man,
they,
there's, ooh. But anyway, so all of this is, I hope the audience will get some, take it to heart, because a lot of this is, again, is war stories. I mean, we're sharing things that we have experienced over our years of doing
yeah,
this.
yeah, absolutely. Well, we are already at our 30, well, we're at 32 minutes. Well, we definitely want to be, cognizant of our audience's
Yep.
time. Business owners don't have a lot of time. So that's why we try to keep it within 30 minutes, and just to give you just enough information to help you make some decisions and realize where you need the assistance. With that, tomorrow is New Year's Eve, and, we really want to wish our audience wonderful, happy, healthy, prosperous, successful 2022. And any last words, Pedro?
Happy New Year and prosperous 2022, and let's get back on it. And give us a call
Woohoo!
if you have any questions that we can be of assistance to you.
Yes, we are here for you. And then we will see you all next Thursday at 10
Yep.
a.m. Eastern. Happy New Year!
Happy New Year. Take care.
Bye.